Palantir Technologies has seen some relief in the Thursday session, with the stock closing modestly higher around the $158 mark. After several tough sessions that saw the stock pull back significantly, losing more than 16% in just 5 trading days, this slight bounce has caught investor attention. But the big question now is this the start of a reversal, or just a pause before further downside? Looking at the broader market, Jerome Powell's dovish tone at the Jackson Hole Symposium is arguably the most immediate catalyst driving Thursday's action. Investors have been starved of positive macro signals, and Powell suggesting a potentially more patient stance on rate hikes was exactly the kind of fuel needed to reignite optimism across tech and growth stocks. Palantir is squarely in that group, sitting in the intersection of AI, software, and government contracts, sectors that have all been sensitive to interest rate expectations. Still, one day of upward movement isn't a trend, and it's worth recognizing the context behind this bounce. Palantir had been heavily sold off, not just due to broader market conditions, but also from emerging skepticism around AI's actual productivity gains. A recent article out of MIT made waves earlier this week, suggesting that the efficiencies promised by AI tools like ChatGPT may not be materializing in real-world applications at the pace previously assumed. This kind of academic scrutiny can ripple through markets, especially when it challenges a prevailing narrative that has lifted AI-related stocks for over a year. Yet here's where the nuance comes in. While the MIT study is worth noting, there's a strong case to be made that it may not accurately reflect the ground reality for many businesses. Real-world use of AI is increasing, not declining. From content creation and data analysis to logistics and enterprise workflows, AI tools are being adopted rapidly, and most users are reporting measurable gains in productivity, even if those aren't perfectly captured in the narrow scope of an academic paper. Palantir's Q2 earnings report, which came out earlier this month, told a different story than the doom and gloom headlines. The company beat both revenue and EPS estimates, delivered strong growth in U.S. commercial business, and increased its number of customer deals. Its AI platform, AIP, is showing real traction, with customers citing substantial cost savings and operational improvements. This isn't vaporware, it's real business application, generating real results. But even bulls need to acknowledge that the stock got ahead of itself. Palantir's valuation is still rich by traditional standards. It's priced as a growth story, and any whiff of doubt about the long-term AI tailwind causes volatility. That's part of the game with stocks like PLTR. It's a name that trades on sentiment as much as fundamentals. When AI is hot, it flies. When the narrative stumbles, so does the stock. That's why we saw such a sharp drawdown this week, even with a solid earnings report in the rearview mirror. There's also the insider activity angle. Recent filings showed that a few key executives have been selling shares. This doesn't necessarily mean they've lost faith in the company. Insider selling can happen for many reasons, including tax planning or diversification, but it always creates a cloud of uncertainty. Investors want to see insiders buying the dip, not cashing out. So far, that hasn't happened in a meaningful way. That said, if we zoom out, the long-term case for Palantir still looks compelling. Governments around the world are not going to stop investing in intelligence and defense-related software. The private sector is not going to stop looking for ways to harness their data more efficiently. And enterprise-grade AI platforms are still in their infancy. Palantir has a real first-mover advantage, with proven deployments and a sticky customer base. Technically speaking, the $155 level appears to be a support zone worth watching. If the stock holds that level and builds a base, we could see a renewed leg higher, particularly if broader markets continue to digest Powell's comments positively. On the flip side, if that support breaks decisively, it could open the door to further downside, potentially testing the low $140s. Either scenario is plausible, and that's why a measured tone is warranted here. For traders, this moment is about patience and positioning. For long-term investors, it may be an opportunity. If you believe in Palantir's long-term narrative and you're willing to ride out some turbulence, these pullbacks can be attractive entry points. But timing matters. The stock could remain volatile as market participants recalibrate their expectations around AI, growth, and interest rates. Another wild card to keep in mind is analyst commentary. So far, we haven't seen major upgrades or downgrades following the stock's recent decline, but that could change quickly. A single influential note from a bank can move this stock several percent in either direction. Keep an eye on the headlines and institutional flows as we head into the weekend and early next week. Let's not forget that Palantir is also a name that retail investors care deeply about. It's frequently discussed on Reddit, Twitter, and YouTube. It has a loyal base that believes in the mission, the product, and yes, even in CEO Alex Karp's eccentric communication style. That kind of retail interest creates a dynamic that's not always rational, but it's very real. Retail flows can prop up a stock even when institutions are trimming, and vice versa. So, where do we go from here? Friday's pre-market session will likely be shaped by follow-through from Powell's speech and any overnight macro data. If futures stay green, we could see PLTR try to retest resistance around $160. If that breaks, it opens the path to $165. But if sentiment sours, or if more insider selling headlines hit, we could just as easily slide back toward the low $150s. What's important is not to overreact to a single day's movement. Stocks like Palantir live on the edge of volatility because they're positioned on the edge of innovation. If you're bullish long-term, the recent pullback is uncomfortable, but not unusual. If you're skeptical, it's a reminder of how fragile sentiment can be when valuation is stretched. Ultimately, Palantir remains a bet on the future, not just of AI, but of data-driven decision-making at every level of society. It's not going to be a straight line. There will be bumps. But if you believe the world is moving toward AI-native infrastructure, Palantir is a name worth watching, worth understanding, and maybe worth owning. Stay alert, stay informed, and as always, do your own research.